Today is the 24th of January 2011. This video supports our market view report dated on the same date, which highlights and analyzes the market on the foreign exchange. With the soft data on UK that prompted the British pound to move lower, currently working at 1.5767 from a high of 1.6015, which apparently was trying to make a new high. Unfortunately, the soft data rather, has prompted the euro and the pound to be softer, whereas the euro is actually working at 1.3603, which is quite a distance on a resistance price, where the channel is working at 1.3768 resistance, where it looks like that the pound and the euro would be softer, comparing it with the movement of the dollar. Obviously, the week's report would highlight on the USGDP report on Friday, and including the University of Michigan's report on consumer confidence, which would be expected at 73.1 compared to the GDP's expectations of 3.5. However, the highlight of the State of the Union address by President Obama would simply mean a positive tone for the dollar, as we could see that the dollar has been making a slight recovery. However, the influencing factor here would be for the euro pound, or rather the cross rate, on a weekly basis, where from the previous chart, which has a channel support at 0.8287, and comparing that with a spike formation here, an engulfing bar, comparing it with the euro, which does have a spike formation, an engulfing bar for others who would like to call it, but however, with the movement of the pound contrary to the euro dollar, has always been in the limelight, regardless of how the market would have been doing, with the stochastics here prompting a cross and a slight increase on the moving average convergence and divergence, where we could see that at this point the euro has been quite steady and the pound has been moving lower. Now, with that said, more importantly, durable goods would also be one of the highlights that we would expect, and the only thing that would really matter now is whether the continuation for the pound to be softer, while the euro pound would be supportive of the euro, and more likely that the 86.60 that we were talking about rather would be the next resistance level, where you could see here that it at 0.8685 resistance would be the first initial objective. Although here on the stochastics there is already a convergence of a buying signal, and including a moving average convergence going to positive territory. Besides, the euro in itself has already penetrated its initial trend line on the downside and way above the moving average on a 21-week moving average of 0.8509, and it is above the opening of the month prompting. If we look at it here on a monthly chart, although this typical hanging man formation currently on a monthly basis, so looking at it on the closing of the month would be very critical whether it would penetrate moving higher to the 87.35 level. However, we would anticipate that it would try to make a high, and for the closing of the month would still be a small bar. However, it would not be a hanging man. If it does, then obviously the next movement would be to move lower for the euro and a slight steadier increase or corrective move rather, for the pound. Although looking at here on the Canadian dollar, as we have taken a position here at the price level of 99, or rather 0.993536 levels, and currently working at 1.0 even, and the next resistance level would be at 1.002425 with a possible high where it's looking at with a slight penetration more likely at 1.0090 or at 1.01 even, which we actually recommended in our market view report dated the 24th of January. However, for now, we would like to keep our video presentation short, simply because we are indeed in the market and we are planning to get into a trade, and that is also the reason why a minimum of at least 4 to 5 charts that we monitor upon entry. However, it is too tempting to short the pound, although we would rather be in a position long rather than short, because short normally would be on a speculative move, shorting the pound, and at this point in time would rather look at how it moves, and would like to thank you for watching and listening to our presentation. Thank you very much and have a pleasant trading week ahead.